Morning, everyone. So I think a pretty downbeat portrait we've had of financial integration, candidly, from the ECB. There's quite a lot going on in the digital space, though. We're going to explore that now, although it's much harder under the surface than it is on the surface. I think we'll discover. Pleased to introduce my panel. We have Evelien Witlox, Program Manager at ECB. We have Jan Ceyssens, Head of Digital Finance Unit at the European Commission. Jean-Marc Stenger, CEO of Societe Generale, which is the digital finance unit. And we have Leonardo Gambacorta, who's Head of the Innovation and the Digital Economy Unit at the BIS. So welcome and thanks very much for joining. Just a very quick portrait or high-level portrait of the landscape and why we're where we are. So in the 2010s, we had, of course, the growth of Bitcoin. Some people would attribute that to cheap money, others to the development of blockchain and DLT, and we'll come back to that. By the time we got to a little before COVID, Facebook scared the hell out of everyone with a project called Libra, which was essentially going to make a new currency, a kind of SDR built of different currencies that would circulate within their social media platform, which governments, central banks and commercial banks didn't like and managed to thwart. However, it did prompt interesting conversations then about digital assets, central bank digital currency, and so on. And we're going to explore those in a moment. In terms of the global picture, OMFIF spends quite a lot of time on this. You have in China, as you probably many of you know, a digital yuan already, which has something like 100 million users. We interviewed the program manager for that, Mu Changchung, last week, and it's actually hit problems. So China is way ahead in terms of developed economies, but has run into legal problems, which we can come back to. When you get over to the US, the Fed probably is as well informed on CBDC as anyone you'll meet, but they think the chances of introducing one are pretty remote, and we'll come back to why that is. When you get to Europe, just a little vignette. We had last week a dinner where I was sitting next to the member of the Digital Euro Unit from Banca d'Italia at the ECB, listening to a presentation by Ignazio Angeloni, telling him or us that a digital euro is a mistake. So the conversation is, I think, not settled. So with that portrait in mind, let's get straight in to start with the format of cash. It's not everything in terms of the digital economy, but it quickly ends up at all the other topics. So I'd like to start off with the future of a digital euro. Evelien, tell us your view of the likelihood of a digital euro and how the project is coming along from your point of view. And then perhaps we'll get into explore some of the broader issues and the balance between the public and private sectors. So over to you first, Evelien.
Thank you. That's a rather wide question, but let me try to answer this. So as you all might know, we are currently in the investigation phase for a digital euro, so which started at the end of 2021, and we will report back to the Governing Council on this investigation phase, which took 2 years in autumn of this year. And then the Governing Council might decide to go to a next phase. I just want to be already very clear that at that point in time, there will be no decision to launch any digital euro. That will not be at that time, because for that time, we first need to have legislation on which Jan and his team are working, and only the draft is currently foreseen. So that will not be the case. We will only be able to take a decision on the issuance of a digital euro when there would be a legislation, just to be very clear. But we might decide to go to a next phase, which will be further exploration, learning, but also further preparation, so that if the legislation would be there, we could go as quickly as possible. So what we've done in this investigation is we have further explored the why, and you mentioned one person saying, and there are more voices like this, of why would we need a digital euro? There are others that are very happy with the digital euro. So there's strong support, for example, from the consumer organizations, from the merchants, for a digital euro. And actually, if you think of the ECB, there are two main reasons, I would say, why we are contemplating a digital euro. And first of all, one is related to the fact that we're moving to a digital age, or actually we're in a digital age, and we see that the usage of cash is declining. And currently we are in an environment where you, as an end user or a citizen or a merchant, you can pay with public money on one hand, then you pay with cash, or you pay with bank money that you put at a bank, and it's private money. And this system works, and it gives trust. So it's not something that the regular person thinks about all the time in his head. They're like, oh, if I put it on my bank, then I can put it into cash, and then it's secure. But we all feel confident that if we put it in a bank, we can go to the ATM and we can withdraw cash, and vice versa. So this convertibility of part gives trust to the full system, or what we call a monetary anchor. And we believe if we move to a digital age where you would have, if we would not do anything, you would have only private money. And we believe that it is important that in this age, you also have this balance with central bank money directly accessible by end users and or via banks. And that's one reason, this monetary anchor. And secondly, we believe that for the strategic autonomy, it's also important to have this digital euro. And there are a couple of elements to that. One is alluded to you. So we see the rise of privately issued stablecoin, you might call a Libra, or other CBDCs. So foreign CBDCs could come. But also, and it's maybe a more practical one, currently we don't have a pan-European way of paying in Europe. So everybody can pay everywhere in Europe digitally, but the moment you cross a border, you need to pay differently. I'm from the Netherlands, so if I do an e-commerce transaction, most of the time I pay with Ideal, but the moment I have a German web shop, quite often we need to have PayPal. So we are in Europe for a pan-European solution, extremely dependent on non-European players as well. So all these things, we believe it's important that also in a digital age, there is, like with cash, a digital euro that you can use everywhere in the euro area.
Thanks, Evelien. You've touched on a whole host of issues which each deserve their own panel, as you know, but we're going to come back to some of those issues a bit later. I just want to zoom out first, though, with you, Jan, to the overall balance between the public and private sector. So from the Commission's point of view, I've mentioned the other regions and their respective developments. How important is it that that policy agencies, whether it's you or the central bank or regulators, support or assist or intervene in the private sector to create a digital financial market in Europe?
Yeah, I think that's probably a key question, and we are all on a journey in a way also to find the right balance here. I mean, this is a classical question for regulation in any event, but of course, the way actually innovation works and functions, it poses itself every time afresh. But let me maybe just make 2 or 3 points on them. I mean, first of all, I think the first one is, as we, I think, from the European Commission, together with the ECB and probably all of you actually are supporters of financial integration. First of all, I think innovation is, I think, a big opportunity on that. You mentioned before, we heard before, some kind of mixed picture of the state of innovation, integration in Europe. Well, I think innovation is probably the part where indeed the hopes are highest that this can change, actually. Of course, every time the system changes, innovation comes, indeed, structures can change. And we all know that digital products, ICT products, actually, they need scale to actually be profitable. And that is a natural kind of ally of integration as well. So in that sense, and I think whether you look at some of the new fintechs, whether you look at established players, really innovation and integration, I think, are things which need to go hand in hand. So from our side, strong support, and we really try to see what can we do from the public sector to support this? I think that's also maybe the second point. While innovation in the end probably productive innovation comes mostly from the private sector. So I think we need from the public side, whether that's on the central bank side, making available financial stability and public money, or whether that's on the regulatory side, making available actually reliable and clear rules. We need to support this, but let's say ultimately innovation will come probably first and foremost in the private side. And there, I think in Europe we have, I think we're trying to make some good, let's say, headwinds. I think we have managed to update our legal systems, whether that's on crypto assets, whether that's on operational resilience. We are working indeed on a framework on data exchange, access to data, all those things where indeed market participants are actually not telling us don't do anything, but they're telling us create clear rules so that we know actually how innovation is actually dealt with, how it's regulated, and above all, of course, have the same rules across the EU, because otherwise it's a mess. So I think there from the European side, I think we are making quite some headwind there, and I think we do try to find, and I think we also probably managed to find overall the right balance between, let's say, regulating and on the other hand, letting the market develop. You can't come in too early, but also as we see now, maybe if you look on the other hand in the US, in some instances, if you come too late in a way, you create this massive regulatory uncertainty that actually people don't scale up their innovation, and that's also not really very good. So we think we need to find this balance here, and really honestly the same is true, and I think that's what Evelien is also working on the digital euro. Indeed, needs to support actually innovation. It is something to build on, also innovation in the private sector.
We talked to plenty of private sector companies, including American banks and fintechs and so on, who grumble a bit about MiCA, but also admire it, as the US is stuck for various political reasons on regulating for digital assets. Just finishing up with you on this, Jan, where do you see the balance between regulation to set the playing field for the private sector, or the provision of services by state agents in order to facilitate private sector innovation?
Well, I mean, I think in finance, normally the former should be the focus. I think the provision of public services is not always, let's say, the most efficient way. But I mean, then again, I think it depends on what you look at. Of course, let's say the provision of public money, for example, if you want, is a service. Even the provision of supervision is a service in a way, and it is bitterly necessary. So I think probably maybe innovation in other areas can grow completely without the state. I think what we're seeing in finance is that, I mean, without some level of regulation and public intervention, it can't really work. So that the balance may be different than in other sectors.
And it's very complicated with CBDC, because in some instances you may end up with the central bank having accounts with the public, you may not, that we can, or being a payment service provider, but we'll come back to that later on. Jean-Marc, as a private sector financial institution, how do you see this balance of public and private development in Europe to create financial integration and strategic autonomy?
Yes, sure. Good morning, everyone. Yes, obviously, we are following all these developments very closely at Societe Generale, and especially within this entity I'm leading, Societe Generale Forge, which is precisely there and which has been specifically built to prepare the World Bank to these upcoming regulations and opportunities we see in Europe with the further digitalization of capital market, potentially the upcoming digital euro as well. That's very profound structural changes we can foresee now in Europe, and which we believe could potentially create a long-lasting competitive advantage for companies and banks in Europe compared to other places. And you mentioned that it's pretty clear that Europe, both on the regulatory front and the monetary front, and these potential developments with the digital euro, is at the forefront compared to other jurisdictions, especially the US, which again creates opportunities for European banks to promote new services, to enhance the services we are proposing to our clients, but also to change the way we are operating our own activities, either on the wholesale side or the retail side. The situation as we see that today is that the agenda and the framework in Europe now seems to us pretty clear. It seems to us that the level of engagement of the private sector, and I'm not saying that for SocGen, is probably a bit behind the curve. The level of investment is probably not where it should be, considering that the time frames we are talking are now pretty short. And again, that's major shifts potentially which are coming ahead of us. What we see also talking to colleagues within other banks or clients, be it issuers or investors, is that we see more and more companies and banks from the US, from Asia, using, if I may say, Europe as an innovation field, considering that the regulatory landmark they have at home is more constrained, which increase the competition we are facing locally. And obviously that would be a pity if the European banking industry would not benefit first from this framework which has been built. So yeah, we can only push for companies and banks to learn more and to be more educating on these upcoming regulations and opportunities we are seeing in the market.
A very high level question. Absent banking union, which we've just heard about, will digital innovation, digital euro or wholesale or retail, make a material difference without banking union to European financial integration?
Well, it could only help. Digitalization, at the end of the day, it's about global platform, global economies, and making flows quicker, safer, easier, cheaper across institutions and countries. So it helps per se to create more integration. It also helps and foster the need for more integration, not only at the technological level, but also at the standard level. We need somehow to reinvent or at least to agree on new common rules for potentially performing these operations using digital assets, digital securities, digital money, potentially tomorrow. So it could be a kind of forcing device to create this more integrated banking union we are talking about.
Thank you. Leonardo, perhaps to pan out now to the rest of the world, Evelien has touched on already tangentially some of the obstacles actually to creating, for example, digital cash. Take us through what you've seen worldwide in your membership. Lots of them are at different phases. There's in developed markets, CBDCs seem to be more important in theory than in practice. It's different in emerging markets. And there are some familiar obstacles which BIS is also helping to solve, such as interoperability and things like that. Take us on a global tour of what's going on here.
First of all, thanks a lot for the invitation. And of course, the usual disclaimer applies. Of course, at the BIS, we are working on CBDC, retail and wholesale both. And we have developed with the BIS Innovation Hub several projects. So we have a few lessons we can share also with respect to the initial implementation of some CBDCs around the world. So the first lesson is that with regards to the distribution of the CBDC with the user, we think that CBDC retail should rely on a two-tier architecture between the public and the private sector, and with the central bank with an anchor role as the foundation of the system of retail CBDC, but with the private sector that is assigned the customer-facing activities. This is very important because at the end of the story, to reach the full benefit of a CBDC, you need to reach some network scale activities, no? And therefore, what it means that as money is is a social convention. An important thing that we have to reach is that there are network effects. Second lesson is that, as you mentioned, is about interoperability that should be domestically and also cross-border. And here we have experience in many cases that how useful is they are API platform to reach this interoperability between the central bank ledger and the private sector system. Third lesson is about to preserve privacy. Maybe we can develop more on this, but privacy seems to me at the end is not a technological solution. It seems to me more of a societal choice. There are a lot of privacy enhancing technologies that can be used to preserve privacy and to reach efficiency in terms of number of transactions. Other lesson, of course, one is cyber risk and to prevent quantum computing attacks in the future. And the last one is very important also to consider offline payments because sometimes we don't have access to the internet. So it is very important that we check about to control for double spending and other problems that could lie in the situation in which we don't have access to the internet. So these are, say, 5 lessons that I could share that with different projects we have developed at the BIS Innovation Hub, we can say that we should move in terms of application.
You have a project called Nexus, I think, which is helping solve the interoperability issues.
Yeah.
We can perhaps come back to that. Just to be devil's advocate, one point we hear is that is a question why central banks and governments, your members, are working hard to create replace a system that already works perfectly well with SWIFT and commercial banks and so on to move money around the world, or even with domestic payments through contactless and so on. What's the reason why state agencies need to replace this existing system?
Well, first of all, CBDC, retail and wholesale are just option. Of course, there are different forms of payment that already work, fast payment system. For example, Pix in Brazil is extremely successful. At the end of the story, to have a CBDC or not, or to have fast payment system which works properly is a choice at the jurisdiction level. It's not something that it has to be imposed. We have, I think, benefit with the CBDC. With the CBDC wholesale, we have definitely a lot of benefit in terms of settlement, especially if we will consider in the future ledgers in which we'll have everything in one place. So tokenized asset, money, information, data. So it's very important to have this kind of settlement that is in a way also allow for smart contract, atomic settlement. CBDC retail, of course, is important, could be important in terms of having a form of executable money in this platform. But of course, there are other options that we can discuss. One is tokenized deposit that could be also very relevant in these prospects. CBDC, of course, have a different, let's say, benefit depending also on the jurisdiction. Of course, in advanced economies, the element of financial inclusion is less evident, but I would say that in terms of reduction of costs for cross-border activities, possibility to have form of executable money together with other forms, tokenized deposit is very important and could really foster innovation in the future.
Okay. Evelien, I want to come back to you on the ECB's view. You haven't launched a product and you still haven't yet made the decision, and you've got to also wait for legislators, as you pointed out. But what are your initial thoughts on the structure digital euro will take, retail and wholesale, and how you intend to solve potentially for these anonymity privacy issues?
Yeah. So the digital euro is a project on retail CBDC. Just to be clear, on wholesale CBDC, we actually say we already have a wholesale CBDC, it's target. but we have recently announced that we are going to investigate new technologies. So we're also looking on the wholesale part, which some call wholesale CBDC, but just with the nuance that I gave. So the digital euro focuses mainly on the retail side. And then maybe there are a couple of questions you asked, but maybe first on the privacy question. Actually, privacy, at least if you look to the digital euro, normally are two questions. And one is the end-to-end privacy that somebody will have. And the other question is, how much data will the central bank have? And those are two questions that are important, and we're looking to both. So, of course, for the first, the end-to-end one, the legislation will in the end define. And there is this trade-off between, on one hand, the right of privacy, and on the other hand, that we want to fight terrorist financing and illegal activities. So, having said that, we are looking to two types of digital euro currently foreseen. One is an online one, which looks more like online payment method that you would know, but the second one would be more an offline one, as was just mentioned, and that would really be with two secure elements where your money will be in the secure element, so there will be nobody in between if you exchange your digital euro. So we believe that this offline digital euro potentially can cater for technology-wise, cater for more privacy, because people need to have both this secure element, need to hold it close to each other, so there needs to be proximity, so there's some limitations. But as said, in the end, it will be the law that's looking at that. And then the other part is the data that the central bank will see. And we are investigating, so what we have said is we have no reason to monetize any personal data. So we are currently investigating how to build a system that can indeed make sure that we don't need to see personal data from citizens.
So in that case, that's solved. Last questions, we could easily spend a long time on CBDC. You wouldn't expect accounts with the public, presumably? No. So what was mentioned already by the BIS, so we work in the BIS and with the BIS, so we also foresee a two-tiered system. So the digital euro are liability to the central bank, like cash, but the distribution will be done via supervised intermediaries. Okay, super. Yeah, and on the issue of digital identity, what further regulation you think might be necessary at a European level to protect the individual without compromising the grounds for innovation in things like AI and digital finance?
Yeah, I think it's a point which basically, actually, if you ask citizens, well, what do they use in their daily life? I mean, everybody uses digital identities. Very often they are provided by, let's say, private operators from where they come. There may be a bank, there may be a big tech, there may be, I don't know what. I think everybody, let's say, uses them. There's also, of course, an increasing awareness of the data traces this also indeed leaves. And I think that's something where, in a way, also some, on the one hand, regulatory framework actually can help because it provides the transparency. It's very clear technology allows for data to flow. So, I mean, the moment you go digital, there's the potential for data to flow. So then it's all the more important that you have clear and reliable rules which are actually enforced to make sure that that you know where this potential is used or not, and that's based on your consent. And I think there we have indeed seen the recent also enforcement actions of some national authorities on privacy, let's say, infringements. I think we start to build a certain level of trust here in Europe on the regulatory framework we have. And I think we can and want to move forward on that basis. The answer to privacy demands can certainly not be to stop digitalization. And that's not what we see our citizens in everyday life to do. I mean, they go digital, they do it. So the answer needs to be indeed to make the digital more private and for people to decide what level of privacy they want. So concretely on our side, I think we have two big projects there. One is indeed the regulation on the European digital identity, which indeed will provide a, let's say, a digital identification solution, which is based indeed on very high standards of privacy. And on the other hand, we work across the EU, something which does not actually work today all the time. In Germany, I'm myself German, unfortunately, for example, on peer-to-peer payments and many other things, we don't really have the solutions which, for example, are in place in the Netherlands. So I think that's one important point. I think the second important point is, of course, then indeed, when you come to the financial sector, to have clear and common rules on the KYC, the anti-money laundering aspects, which is a key element of, let's say, the public-private balance. And there also in the, let's say, the package which is currently being negotiated, we have very clear, fully harmonized rules indeed, which set these levels across the EU. So I think that should also be good news, both for firms who are active here and also for citizens who then will indeed again know exactly which data are being processed where.
Okay, well, I'd like there are other areas of regulation as well to explore on stable coins and non-banks. We'll come back to that in a minute. I'd just like to ask for a quick show of hands. Who believes that we'll have a retail digital euro within the next 7 years? If you believe that, please put up your hand. That's a significant minority, I think. So that's more than I might have expected. So that's encouraging for you, I think, Evelien. We've had some good questions in already from the audience, so thanks for those. I thought Jean-Marc, we might try to put the first one to you from Ben Pott. MiCA creates a single EU market for non-financial digital assets. What are the EU plans to recreate this for tokenized securities and move beyond the current DLT pilot? What are your views on that from a private sector point of view?
Yeah, sure. First, I think we very much welcome the DLT pilot regime for security token, because as a regulated bank working every day with clients, you need first a very clear framework to operate and to engage with clients in real transactions. So that's first element we definitely needed to start basically this journey and to go towards more digital capital market. And we do believe that indeed tokenized securities are probably the future for capital market activities, maybe not for whole activities, but definitely for certain asset classes and certain operations. We see very clear benefits in bringing the security natively full digital on DLT notably. And this has been evidenced by a number of real market transactions we have already done with clients. No, that's, as said, it's a journey. We are starting this journey with clients. Adoption need to increase within the private sectors with issuers and investors, not only with banks. No, it's sure that there should be and there will be a next step to the pilot regime, but you need to start with that. There are questions sometimes which are coming from the market when you try to structure real capital market transaction on how these transactions should be structured, notably in terms of maturity. That's I would say a big feedback we receive from clients. Clients are tempted these days to engage only in short-dated maturity transactions because of the structural nature of this pilot regime, which by definition is limited in time, with some uncertainty on what will happen next. And due to the financial structuring and the financial parameters, short-dated transactions are not best today. So, I mean, that's probably the main comment I can make on that. But no, overall, very good developments we see on that front.
There have been some suggestions actually that although DLT is very interesting as a peer-to-peer technology, the atomic settlement will reduce liquidity because you get rid of netting and so on. What's your view on that?
No, I think this comment often comes because people, and that's natural behavior, tend to kind of copy-paste the model we know in traditional financial market infrastructure to this new world of DLT. Actually, we need to rethink a little bit the way operations are conducted, because most probably one of the main goal of these developments and the main benefit of this technology is to streamline the operations, reduce the number of intermediaries and the breaks we can have in operational chains. So it also structurally remove the needs for some of these structure we know today. In terms of efficiency, fluidity, and liquidity, which can be achieved, we don't see any drawback from this. I would say certainly advantages. Advantages tied to the fact that it would most probably create more global marketplaces, facilitate the distribution or the ability to invest more granularly into securities and hence enhance at the end of the day the overall liquidity in the market.
Leonardo, just very briefly on DLT. In China, for example, their CBDC isn't on DLT, but mBridge will be, which is the cross-border version of CBDC with HKMA, Bank of Thailand, the UAE and others. Is DLT going to be a wholesale technology and not a retail one? What would you expect?
So both technologies are at the moment analyzed into the BS Innovation Hub. That is a more centralized solution, DLT solution, as you mentioned, for cross-border activities. It really depends on the sort of a trade-off in terms of cost benefit and how much, let's say, information you want to share among central banks. But both have a great potential. So in general, we see as for the, if we believe about something like what will be in the future in terms of ways to have everything in one place, to consider both money as executable object, tokenized asset, tokenized deposit, information. Also, centralized solutions are very relevant. For example, we are thinking about one potential model for the future that is a sort of a unified ledger, where this would, of course, having everything in one place would allow for the possibility of functionalities that are in the DeFi space, but we can import also in centralized solutions, programmability, composability, smart contract. And all these can be possible maybe in this ideal model, but in the meanwhile, we can use APIs platform to link actual system and to allow for these new functionalities to develop.
The people, it's interesting about information. The People's Bank of China told us that they're using DLT for mBridge essentially because it avoids the necessity to transfer information.
Yeah, this is because of course when you have cross-border activities, one element that is very important is a digital ID, and you can have a different format in which you can have a supranational sharing of information with digital ID. Maybe this is not feasible, but you can have, you can agree on common elements to share and to have a digital ID to be performed at the domestic level.
Right.
So it's just again technological solution to solve problems that are also in some cases of governance or sharing of data. And so
yes, exactly. Just to go into more detail on stable coins. This is obviously a technical question, but also a financial structural question. Some central banks have said they would welcome stable coins, essentially regulated a bit like money market funds or narrow banks, to compete with commercial banks to apply competitive pressure to them. It would be a very basic summary. To what extent do we expect to see material euro stable coins in the next few years? And I'm going to ask the audience that as well. But Jan, and I'm going to ask you as well, Evelien. Jan, what do you expect? They've got a bad name, or got a bad name last year, but perhaps were misnamed. Well-regulated stable coins might provide some interesting benefits here.
Yeah, indeed. I mean, I think some of the stuff which is called today stable coins is really not very stable in that sense. Also, I think from our side, we try to avoid this name. I think what we have done on the European side is indeed to put in the MiCA framework, set out what are the requirements which you need to fulfill to actually, let's say, promise stability. So that would be now the law of the land in Europe. If you promise stability towards an official currency, you will have to have a reserve which is segregated and in custody. You will have to, let's say, have a clear redemption right at all times and a number of other actually safeguards. And I think, honestly, the jury is out how it will develop now. I think we have a framework which basically, if applied like this, probably can provide a certain solidity. Now we will need to see indeed how the market takes it up, how it develops. From our perspective, indeed, public and private money are never actually mutually exclusive. I mean, we have very good experience with them coexisting in the recent, the recent and distant past. We shouldn't bank either only one or on the other, and I think this also applies in this area. The digital euro may not have all the technical features that maybe a stablecoin can provide. It may have other challenges for certain applications in a way where stablecoins may have their advantage. For me, I think maybe the real question is probably what will be the actual use cases where stablecoins are, let's say, maybe the better alternative and also a safe alternative, and what are the areas where probably the euro may be then indeed more relevant. Of course, the broader the use in the public, the more also the argument for indeed the use of central bank money. But overall, from our side, we do see a certain, if once stable coins will be safely regulated, which will be very different animals than what we see today, we do see the possibility of a coexistence.
Do you think it's possible, if we listen to the banking union chart from earlier, Adam's members or Chelsea this last year are essentially tearing their hair out at the necessity to separately capitalize each jurisdiction in the Eurozone when their American cousins don't have to do that. Can you see a circumstance where stablecoins might be able to leapfrog that and not necessarily be nationally regulation capitalized and could operate on a pan-European basis and leapfrog the banks in that way to create a single financial market?
Well, definitely, I think under the MiCA, let's say, framework, which is now agreed, indeed, we have a common, let's say, a full passporting regime. So that means, indeed, if you are authorized in one jurisdiction and have the reserve under that law, you will be able to market across the EU. I would, however, maybe compare this then a bit more to, indeed, other payment means or investment funds. You already mentioned the parallel before. I mean, I think the banking area when it comes to credit intermediation is quite a different business model. So in that sense, on that side, I mean, a stablecoin would not be a competition to the banking sector in a way. And on the payment side, in a way, I think we already have, let's mention that as well. It's not as if today the banks were the only kids in town, basically. We already have a lot of indeed competition and competitive alternatives. And that will probably continue, I think.
Leonardo, we'll come to you in just a sec, but Evelien, if you listen, Bank of England is one. They are quietly pressuring banks actually to set up sterling stable coins, in essence to compete, dare I say, with payment providers that they think are charging too much. What would you expect in the form of stable coins, and how are you thinking about them in terms of financial stability? This is always a consideration as well in digital money, that you might accidentally defund the commercial banks with all the chaos that could cause.
You're over asking me a bit because I'm the program manager for the digital euro. So and this is not really my field specifically. What I can say is what Jan said before is what we have seen so far of stable coins is really not stable coins, and I think the ECB has been very vocal about that. Coming back to the digital euro, we have been very how do you say it, clear that the digital euro is not there to dominate or whatever. So the digital euro is designed to be there as well. So next to cash, so but also to private solutions that are there. So like Jan said, we'll see how this goes. But the digital euro is not there to fully wipe out any other private payment solution. It's just there to coexist.
But your own view would be that it may eventually coexist with euro-denominated stable coins that work as a version of cash, potentially.
Yeah, of course, but we need to see how it develops, because what we have seen so far, we don't believe in.
Okay.
So we have to see how it develops and how MiCA indeed will put a framework that will make sure that there is something that would be good.
Yeah, hard to make money out of it at the moment. I think that's probably why they're not there. Leonardo, you wanted to come in on
to follow up on what it has been said so far about the future of stablecoin together with you. I think that we have to start with the consideration that the stablecoin are used to import credibility from the real world into DeFi applications. So the future will be positive if DeFi application will develop further in the future and will create real cases for of welfare improvement for households and firms. So far, I've seen little about this, but maybe in the future this will be the case. And of course, if a stablecoin will develop, we'll have case of disintermediation. So an alternative solution to have a sort of a form of executable money that have not this limitation of stablecoin is tokenized deposit, because tokenized deposit have one element that is very important is the signalness of money. So stablecoins, they're not always at par, and therefore there is volatility. A second consideration is that with the tokenized deposit, we could have a settlement finality that is not reached with the stablecoin. And the third point, it is very important, tokenized deposit would not create this intermediation, would allow to the banks to continue to perform their financial intermediation activity.
If I can add on that one,
please.
If I may, indeed, under the MiCA framework, we have both models. Now we have the, let's say, non-bank reserve-based stablecoin as today under e-money, and as today under e-money, we have the bank-based, let's say, balance sheet-based model, which is in a way a bit more in what is now called in the tokenized deposit direction. So in that sense, we have both possibilities. Let's see who in Europe actually will go ahead.
Okay, well, so you're setting the playing field to see what wins. Just on this view on that financial stability. So we've seen in the US very different case for all sorts of reasons, but the digital mobility of money puts fractional reserve banking under strain, arguably. And there are all sorts of answers to that in terms of deposit insurance through to nationalizing all the banks, but a complicated area. But to what extent are you concerned that commercial banks, which after all create money, would be unduly disrupted by digital versions of cash? Jan.
I mean, again, I think there are two functions of banks. One is indeed the payments area, and one is the, let's say, the credit intermediation role. And I think I can't see how that role can actually go away. So in that sense, we don't see this direction of travel. Of course, what we see now and as developments creates quite a number of questions and challenges for supervisors, for banks as well. So in that sense, I mean, it will not stay as it is today. But if you see also indeed when you look more at the fintech scene, how many actually also startups or by now more developed companies are precisely going into banking in a way and starting with maybe more the short payments and then current accounts, but then also, I mean, always going slowly into credit. It doesn't seem to be a model of the past anyway.
And in fact, the European Banking Authority, I think, isn't it, looking at regulating non-banks like banks over time. If they start to look like banks, they'll be regulated like banks, essentially.
That's the law, indeed.
Yeah.
If you do credit intermediation, then you need to have a credit license.
Jean-Marc, we've got a good question here just to sum this theme up from Barbara Frone. Fast forward 10 years from now, will the digital euro and stablecoins coexist, or are they mutually exclusive?
No, I think I fully subscribe to everything which has been said, and which is also in the question. I perfectly see a coexistence of these new forms of payments or settlement, and we also very clearly see the need being focused on our end more on the digital securities and the security leg of the transaction. We very clearly see the need for having this new form of settlement being on chain and living basically in the same kind of network as digital securities tomorrow. I think it's only new tools which will allow us to offer again better services to clients and possibly new services as well. There is the the new nature of these form of payments, which are linked to the programmability either of the stablecoin or the digital money, which could open new opportunities as well. And also just to come back on what has been said, we basically don't believe that these questions at the end of the day are technological questions, and very comfortable as well on the future role for banks in that field. It's a matter of regulation. It's a matter of liability, of being within a network, connected with your clients, being able to understand the need and structure operations and possibly stablecoin, leveraging on the industrial expertise we have within banks in terms of risk management, in terms of managing regulatory frameworks. It's all about this. And yeah, I think for all these reasons, banks have a natural role to play in this picture tomorrow.
Thank you. I just want to ask the audience then, who here believes that there'll be a material stable coin or coins denominated in euros in the next 7 years? One person, or two people, three maybe. So a very small minority think, even though Jan, it sounds like has set the playing field for that to evolve. For whatever reason, you don't believe that that will make use of that. So that's interesting. Certainly, Europe is ahead of the US on this, with a very complicated wrangle about creating digital assets regulation. I wanted to come on to the relative status of the euro. So OMFIF measures reserve currency intentions. And the euro has been pretty steady at 20%, something like that, versus 60 for the dollar. And there are very complicated issues around digital payments, which may mean for smaller economies that they'll end up adopting the digital currency next door, for example. Do we think that the status of the euro will be bolstered on the international stage by the digital regulation and the development of the digital euro at the ECB? Do we believe that's going to happen, and it will help defend or boost the status of the euro as an international unit of account? Starting perhaps with you, Leonardo.
Well,
I know you can't comment regionally, but I thought I'd ask you.
Yes, but... No, but I can say something. I don't, as BIS employee, we don't refer to specific jurisdiction, but in general, reserve currencies as dollar, the euro, could become even more dominant if available digitally. I think that this is very important, because this will be available with a lower cost on a wider base. So this is an element that I can subscribe. Of course, also new currencies and new reserves could emerge. But what is important is that the importance of a reserve depends on the credibility and the stability of the institution, the degree of financial openness, international trade flow, the rule of law, geopolitical consideration. So at the end, in the short term, you could have some effect, but in the medium term, the role of reserve is always linked to these fundamentals.
Okay. I think it's unfair for me to ask the Commission and the ECB this question. So I'm going to ask SocGen instead.
No, I said I think there is an opportunity window for Europe and European companies and European banks, which comes with this new set of regulation we have in Europe, which are clearly very innovative, very ambitious, and coherent at the same time. So it's a good place to develop this business. And having more digital capital markets, more digital securities, and potentially cash could only improve the usability and the ease of use of these assets, including cash. So yeah, very favorable developments ahead of us. But yeah, the dynamic needs to start at the industrial level and at the corporate and financial institution level now to seize these opportunities.
Let's talk more action, I think, what you're saying. I said I wouldn't ask you, do you want to comment on the digital developments as a support for the euro as an international currency? You're welcome to comment if you like. Looks like no.
I mean, I think As I think the factors were already mentioned, what makes this currency strong or not. So,
Yes.
I mean, yes, maybe in the bigger picture, the digital part can be one among many factors, but it's probably not the only one, and maybe even not the main one. And I mean, indeed, it depends, as Jean-Marc said, it depends not on rules on the paper book or on projects, but it depends on actual reality in the first place. So in that sense, I mean, the question will only become relevant probably in 20 or 30 years time from now.
Fair enough. I ask because there's wild talk of de-dollarization doing the rounds at the moment, also as a function of the digital one, but we'll explore that another time. I want to finish actually with Jacqueline Mills' question from AFME. Evelien, I'll put this to you. And it's the real question, I think. How do you rate the cost benefits of integrated payments that the digital euro could allow? How would you answer that?
Well, there are a couple of angles to this. But first of all, I think one of the important things, and it was said before, payments have a tendency for network effects, and that means that there is a tendency for a couple of strong players to be there. So one of the elements of more strategic autonomy is that we really believe that with having also a public option there, it balances and it makes sure that there's sufficient competition among. So in that sense, we do think it's good that that would be this public option would be there also in a digital age. Then secondly, we in the implementation and in the rollout, there are a couple of things that we want to make sure that we do it as effectively and efficiently as possible. So we try to build as much as possible on existing solutions that or standards that are already there. We get a lot of questions about, okay, we have done all these investments for instant payments. Is this not for nothing? I think it's important to note that for instant payments, banks do lots of investments, but it is to make sure that your whole backend processes are 24/7, which I think is essential in a digital age, a basic thing that needs to be there, but also something that you would need for digital euro. So we will very much leverage that. And finally, we believe with the standards that would be set for digital euro, that could also be leveraged for commercial solutions based on instant payments.
Right. So it sounds like it's definitely worth it for the derivative effects,
Yes.
setting aside the symbolic value of money.
Yes.
Yeah. Okay. We're coming towards the end, so thank you very much. If any of you would like to ask more questions about this topic, we're talking to Gallo at the end of the day a little bit more about the digital euro. So it's a very complicated area, and I can tell you, spending lots of time on this in other parts of the world, that although you've just seen very miserable charts about financial integration in Europe, Europe is, even though it doesn't have Google or Facebook, way ahead of the US in this area from what we hear, albeit behind China. Anyway, thank you very much for listening. One area of this discussion that got forgot a lot at the beginning was the importance of banks and what they do in the economy, and Adam is going to return to that now. So Adam, please come to the stage, and thank you everyone for your wonderful contributions. Thank you very much.